You want to make some money, but you have no idea where the markets are going to be going in the next few months. We're living through unprecedented times. There's a lot of things going on with the Fed as the lender of last resort since COVID. And there's a lot of things going on internationally with a lot of different countries around the world doing a similar rate change like we're doing from LIBOR to SOFR. There's several different countries doing the same thing in different regards. But nonetheless, there's a lot of shit going on right now. And on top of that, there's a lot of misinformation going around. And unfortunately, a lot of this misinformation is coming from the news media, coming from the so-called experts, coming from the YouTubers, coming from anyone and everyone who hasn't actually taken the time and effort to look into the situation and see what the heck's going on. Now I'm about to show you just how easy this all is. So if you want to know what the SPY is going to do, sorry bears, it's not going down anymore. It's going up. It may go down cyclically, but for the most part, as far as those 340s, 350 numbers that I see everyone talking about, not going to happen at least in the near-term future. That's going to come much later. But as for the immediate future, follow along with me very quickly, and you will see, hopefully by the end of this video, just how easy it is to see where the markets will be headed. So follow along if you can. This isn't too difficult. It's actually pretty simple. So first of all we're going to be doing is looking at the SPY chart on the daily with moving averages set up on it, okay? And this is the setup. We're going to have our 252-day MA, which is the number of trading days in one calendar year. We're going to have the 200 MA, which is a standard moving average. We're going to have the 21 moving average, which is the average number of days in one trading month. We're going to have the second standard moving average of 50, which 250 is where you get your death and golden crosses from. 50 going up underneath, crossing underneath. 200 is a golden cross, and vice versa is a death cross. And then lastly, we're going to have the 63-day moving average that is basically the average amount of trading days in one quarter. So let's go ahead and take a look. So yeah, trading days in a year, standard moving average, trading days in a month on average, standard moving average for the 50, and then trading days in one quarter on average for the 63. Now these are the colors that I have set up for it. You can set up the colors how you want, obviously. The only reason I'm explaining this is so that you can follow along with the moving averages. So the 252 yearly moving average and then the 200 moving average are going to be the green and the blue, or I'm sorry, the yellow and the blue. And really, all I want you to pay attention to is where the blue and the yellow lines are respective to the lower moving averages below it, which are the 21, the 50, and the 63. So what we're looking at here is the 2000 dot-com bubble. So what do we see here right around when this crisis begins? Well, the 200 and the 252 MAs go above the rest of the moving averages. Then, a little bit later on down the road, 200 plus 252 moving averages go back below the rest, and then we enter into a recovery period. Next crisis, we have the 2008 crisis. Now, what happens? Well, during the 2008 crisis, the moving averages, being the 200 and 252, go above the rest. And then the 200 and 252 go back below the rest, and we enter into recovery. Next, we have the 2016 presidential election, supply chain, China trade war era. What happens? Well, this one's a little different, but the same concept applies. The 200 and 252 MAs, or the blue and the yellow, go above the rest to create a double bottom here. And then, you guessed it, 200 and 252 goes back below the rest, and we recover. Next, we have 2018 LIBOR SOFR transition beginning. There was probably some shocks due to this. And what do we see? The 200 and 252 MAs go above the rest, very briefly this time, albeit, but still go above the rest. And then what happens? The 200 and 252s go back below the rest, and we enter into recovery until the next problem, COVID. What happens during COVID? Well, considering the Fed stepped in at this point in time, we had a very snappy recovery here because of SLR, but in essence, the 200 and 252s go above the rest. And what happens after that? Of course, the 200 and 252s go back below the rest, and we enter into a recovery. Now, let's go to the current day. What do you see on the screen? You see the 200 and 252 MAs above the rest. Now, in every other financial crisis that we've had since the dawn of the SPY, what has happened after the 200 and 252 MAs go above the rest? That's right. They go back below and we enter into recovery. So where's the market going? Ask yourself this question. Are the 200 and 252 MAs going to go back above the rest and recover? Or up back below the rest and recover? Or it doesn't for the first time ever? That's the bet. Make your bets. The media are clowns, all of them. Use your brain, bears. Come on. Are you going to bet on the markets not doing what they've always done since the beginning of their existence? Or are you going to take the bet that this is going to be the first time in history that these lines will not go back above or below, the moving averages on those lower time frames? Again, it's happened every other time. Every other time this happens, we recover. So, why would it not happen this time? That's all you got to look at. That's all you got to look at. So just keep that in mind. It's really not hard. You just got to think outside the box. Look at what matters. This here has happened in every single big crisis that we've heard of in our lifetimes. And every single time this happens, it always recovers. What I mean by recover is these three lines down here go back above these two lines right here, confirming the recovery. Now, why is this one a little bit more drawn out than usual? Soft landing. We have the Fed steering the wheel this time. It's the only difference. So, in essence, the Fed is here steering the wheel, and they're gonna make sure that all is well in the long run. Now, what comes back after this gap fills? Don't know. I'm looking for 400. But, judging by the past, I think it's safe to say we're going to enter into another recovery period. Let me know what you think.